Hello folks, my name is Brian and I'd like to welcome you to Trader's Mind. What I'd like to do is just take a few moments and get you acquainted with what we do here at Trader's Mind, what you can find here at the website and in our blog. Hey, without any further ado, let's get started. Okay, the first thing I'd like to do is just give you an overview so you can see what you can learn here at the website, what you can learn from us, what we offer. And first thing we'd like to just mention is how we manage a portfolio. So you're going to get to look over our shoulders as we manage several different portfolios that we trade. So we trade small portfolios, and the reason we trade so many different portfolios, and for ourselves, it's not just fake accounts, but just for ourselves, is because everybody that comes to trading comes with different objectives, different size accounts. So we pretty much cover the spectrum. We have small accounts that we trade in, regular margin accounts. We have portfolio margin accounts that we trade in. We trade in retirement accounts. We have large accounts where in excess of 7 figures. So you get to see how we mix the soup, put trades together, and manage those through the life cycle of the trades. And we're not just throwing a lot of trades inside of a portfolio that we have a nice name to it. No, we have very strict, very objective goals that we're trying to get to every month. So each of our portfolios has a different objective. You know that up front. We're very transparent in what we do here. We provide you with all the portfolio stats for all the different portfolios we trade. I've been keeping those and showing those once a week ever since we've been making these portfolios public. So it's a really neat aspect. And at some point in time during a trader's journey, he's got to venture. He or she has to venture away from the trade. That's what everybody wants, the trade, and they have to graduate to a point where they start looking at their overall portfolio. So that's the point of this piece right here. All right. So one of the other things you're going to have the option or the ability to do is learn non-directional option strategies from us. This is what we love to do. It's kind of our niche. It's the high probability of success trades. So we love the strangles, the iron condors, and we use variations of those things to make our adjustments. So you get to learn all that stuff from us and watch us put these trades on. Watch the timing, the duration, how we adjust them. That's really the key to that right there. And what triggers us to put to these trades or add to them as we go on. So we do directional option trades as well. We focus on very low risk and very high reward because let's face it, even though high probability of success trades is kind of our forte and our niche, we still enjoy taking shots when markets get at extremes, and that's when we start trading directionally with option trades. So we'll show you a little bit about what we do when we start trading directionally. Some of those trades are very, very powerful. We do have day trading, short-term trading model that's pretty neat. I'll show it to you as a little bit later on in this presentation here. But we also we enjoy day trading. Or it's not day trading. We just pick a time, maybe after trading hours, and trade gold, crude, some of the currencies. So and we pairs trade as well. So we love using futures for that, and we love using the model that I have to trade those things. And so we're going to give you a shot at looking at that as well. And trading tops and bottoms. We're going to show you how we measure those. That's really the key to what I think the key is in trading extremes. So it's just putting context around trades. Guys, nothing I show you in this website or the blog, there are no secrets in trading. You know, the only secret is how you look at trades, how you think about trades, how your mind wraps around trading in general. So that's really the only secret, I think, in the whole trading realm. So anything I show you on the side here is not voodoo, not magic. It's just putting context around trades so that I can see where a trade is relative to where I think it should be. That's all it is. If I think that a market is at an extreme and I can measure that extreme based on historical moves, then I'm more apt to take directional option trades at those extremes. So I'll show you how we measure those things in this, as we move through time. And then market analysis. Every week, every Monday morning, somewhere prior to 6:30 a.m., I publish key levels for the week for several markets, and we'll go into those a little bit later here. But we take a look at the major markets that kind of govern our financial landscape. All right, so let's dig a little bit deeper into managing a portfolio. So, I mentioned it before. I'm going to show you how we tackle retirement accounts. My objective is 4% a month. I'll let you know what kind of trades. I'll show you the trades I make. It's really two strategies that I love that I just rinse and repeat. I do them over and over and over and over. And I generally only trade one market. So that's how I tackle a retirement account, and that's how I am able to set objectives at 4% a month, and you get to see how that pans out over the course of a year, 2 years. You get to watch us trade a portfolio margin account. For those of you that may be hearing portfolio margin for the first time, portfolio margin is it's an account where you are provided with where your capital is treated very nicely. It's somewhere around 6-to-1 leverage. Not that we go in there and for every 100,000 we put $600,000 worth of trades on. No, we're using those when we have to use a portfolio margin account, and it's a benefit in the stock market where you're trading options on stocks. You can trade stocks as well, but the portfolio margin is really a big benefit when you're trading options on stocks. Now I have to tell you, I primarily love trading options, all of our strategies on futures. I should have placed that in our overview because that's really all I do. Now there's a couple accounts like retirement accounts where I don't trade futures in those. It's not because they're risky or anything. They're absolutely not. They're like trading any other type of security. You just have to understand how much notional dollars you're trading, and that's it. So that's easy to do, and it's not anything to be afraid of. I like futures because they're easy to access after hours. We get to trade, especially for somebody with a day job. I mean, you can trade the same trades we do, make adjustments at night if you have to, and drive right on. But you get to watch this in a portfolio margin account. And in the portfolio margin account that I trade, we do a variety of trade structures. You name it, straddles, strangles. We do directional option trades. We do lottery ticket trades in the options market. I mean, I've got penny stocks in my in the account right now. So we do a little bit of everything in there. So that's just another avenue or another account that you get to watch us trade in. And one of the most exciting things I think is I have an account, small account, and it's learn how to swing for the fences. So you get to watch me trade this account. Now this account I try to make 10% a month, and that's my objective. I trade one strategy, one security, and that's what we do day in, day out. So it's pretty neat to see, pretty neat to see how it works out. And most people don't believe that you can intentionally set out to double your money every year, but we want to show you that you can, if you have the stomach to ride through it. You know, I don't want to make any of this sound easy, because it's real money on the line. And anytime, let me go back just a second. And anytime you've got real money on the line, you know, all this stuff sounds really neat till you hit that first drawdown. Drawdown is it's the loss that what I call the temporary loss that you may have in from the most recent equity high in your account. So I can tell you from personal experience, I've doubled real accounts numerous times, and I've doubled one, I've had two doubles inside of 16 months, and I can tell you that in both of those instances, I never was able to get to 100% return without first experiencing a 50% drawdown. That seems to be when you're swinging for the fences and you've got that money management algorithm set to try to get you to that double. You are almost destined to get a 50% drawdown to see if you really want to try to make it. I laugh about it, but I mean, if that's all you've got and you're trying to make it, swinging for the fences, hey, it's painful to sit through, but it's also fun to do if you have a small amount of money and say you want to take $5 grand and you want to see what you can do with it in 10 years. It's a perfect strategy to do that with. Alright, learn how to structure trades and incorporate money management rules that enable you to target rates of return on your capital. That's the really neat thing about the type of trading we do. I've been trading in the markets for over 30 some years, since '82. And I'll tell you, I've done everything from corporate bonds to mortgages to mutual funds to stock trading to preferred stock trading to futures trading, and honestly, the only game that lets you apply math every step of the way is this game. It's a game of strategy, so you get to determine what your rate of return is. Once you get past the basics, once you are clear of all the concepts, once you understand how to structure trades, once you've traded for a good while and you understand when to put trades on, the duration cycle, you know, how to set your strikes, you know, when to actually add to your trade, when to take it off, how to manage the trade, you know, what to do when you get in trouble. Once all those things become second nature to you and you become numb to it, then you start wanting to figure out how to ramp up your game. And the only way to do that is to be very good at trade structure, and then become very good at money management. So we'll take you through that as well once we go through, you know, as you watch us trade. And then once you learn once you learn a few of the money management rules and algorithms that we have, then you can allocate capital in your portfolios just like a hedge fund manager can. So that's what we want to get you to. That's what we want to help you get to is, number one, master the trade. Number two is to incorporate money management rules that let you target rates of return on your capital so that you can move to allocating capital and trading a portfolio like a hedge fund manager. And then the most important thing is we want your mind wrapped around this and in the right place. Because if your mind's not right, then none of the other stuff really matters. So that's kind of the calling card of why, you know, I've always called this the trader's mind. That's one of the most important aspects. All right, so in non-directional trading, what we can learn is we can master strategies that have produced over 90% winners. So these are some of the strategies that I've traded for years and years and years that have just withstood the test of time. There's nothing magical about it. You can pick up books. You can Google these strategies that I use time and time again. But again, the key here is to master the strategy, and that's master the trade structure, understand the risk profile, understand when to take profits, understand what to do when you get into a bind, and if you keep track of these things like I do, you look back and you're like, wow, I hardly ever have any losers. So it's a really good feeling. Not that when you do have a loser, you can't sit through it, because it could potentially damage a lot of your winners if you don't understand what you can do to try to keep these trades going when they start running against you. So anyway, next thing is well, we just talked about that. We want you to become a subject matter expert in this. That's really the only way to thrive in anything, is to become so in tune with what you're doing that even though some people may shun what you're doing, may not get it, may not grasp it, may actually detest it, you've become so good at it that you make it look easy. It always seems to work for you, and you can get out of binds when you need to. So that's the level we want to see you get to. And then we just talked about that. So yeah, managing the non-directional trades is a very important aspect to increasing your overall win rate. Once I learned how to do that, once I learned how to take profits, at targets, my win rate started going up quite a bit. When I first started, I was putting option trades on, holding them to expiration. It was nail biting the first 6 months I traded options. I was like, oh my gosh, I have to go into another expiration cycle. And then a light bulb went off, and I started taking profits, at percentages of my max profit. And that's when things started to turn around. You get to see the time frame or time frames that we like the most. So I have 2 time frames that I really like. So you get to see those, and you'll get to see us trade what I call the most consistently profitable strategy that I've ever used or ever seen. And it's not it's in a very short time period. Alright, so directional option trades. This is what a lot of people really like, because, who doesn't like the lottery ticket? Who doesn't like, risking $250 and making $5 grand? So those are the things that everybody's drawn to. But what really makes money for you month in and month out are those non-directional trades. Those non-directional, boring, max profit trades that you just grind out month after month after month. But everybody seems to be lured in by the directional option trades. So, hey, I want to buy 1,000 of those 3-cent options right there. So that's what everybody likes. But we do play those as well. And what we do is we place them at extremes in the market, whatever market we're looking at. So we want to show you how we do that. We want to show you how we can structure option trades so that you risk very little to potentially make a lot. So we have different trade structures that we can show you, and again, no trade secrets here. There's nothing hidden behind the curtain. There's nothing that's very sensitive about what we do. So it's just how we mix the soup, that's all. And once we're trading directionally, I can show you how to mix the soup so that the combination of option trade structures you have delivers the best punch. That's really important. I got to tell you, personal story, a couple years ago, me and our trading group guys we're trading. Back then we were trading a lot of stocks. I had Netflix had just gotten a wallet, and I don't know why I I don't know what happened. I'll be the first to tell you that I don't know anything about the markets other than how to structure trades, to take advantage of probabilities. Probabilities are very important to us here at Trader's Mind. So Netflix had gotten battered in an earnings report, and this was probably, I can't remember, September, October time frame. So I had made a play on Netflix for the next February. It was like 4.5, 5 months from when I placed the trade, that Netflix would be, I think it was either 160 or 260, yeah, it must have been $160 higher. I just thought it was going to get back up to that level the way Netflix was moving. So I made an options trade. Risked about maybe $2,000 is what my risk was. So what I failed to do was I didn't go out enough in duration, meaning I didn't go out far enough in my options trade. I placed the trade right behind I think it was either a late January or a February option expiration. So the potential was huge on the upside. If it got to my point, we were talking hundreds of thousands of dollars in profit on $2,000. That's the trade structure I had. That was the payoff. So we roll around to February the next year. We hit the earnings, and Netflix starts moving. I mean, it moves like crazy. But it didn't move far enough. It moved up far enough to where I was able to come out of the trade for, I think it was about a $4,000 or $5,000 profit. Good trade, nothing wrong with that. But the trade ended on a Friday, and the following Tuesday, the market went through my mark of where I said it was going to go. It was a lucky stab. But had I been in the trade, and Netflix has options, that expire every week. Had I been in the trade just one more week longer, that would have been something like $330,000 in profits. So the lesson here is, when I've lost on most of my directional trades, it's been because of this right here, duration. So that's what we'll talk about too. And I still struggle with duration on most of the directional option trades. So if I get the direction right, I get the duration wrong. But it's still fun to play those, and we have enough of those winners that they pay off. So anyway, that's our directional options trading pitch. Here's a recent trade that I put on. This was about 2 weeks after I had placed the trade. If you're not familiar with the P&L graph, this is how we look at options and kind of treat it like a business, trade it by the numbers. So right here what you see is a current price. You see my profit graph. You see here's the trade that I put on. I bought 10 contracts at 30 cents. With the math, with the options math, that means I've got $300 in the trade. With my commissions, another $15, so $345 in the trade. And after about a week and a half, here's the profit, $2,034 and some change. So you can ramp up pretty quick on some of these, but we don't put a lot of money in these because these are not the consistent money makers for us. I want to hammer that home hard. We play these to spice up what we're doing, but the way we make money is high probability of success, non-directional, boring option trades that you can trade while you're working a day job. So, but we still like to spice it up, and we're still going to. Alright, let's see here. Alright, so in our directional, let's switch gears here, and this is another thing we'll show you some glimpses of. Have a day trading model. It's very simple. It identifies high probability of success trade areas. It's used on all markets. And we'll provide you with the best time frames to day trade this strategy if you're interested. You got to be fast when you're using this thing on the day trading time frame. Now we use the same model for what I call short-term trading. So short-term trading is maybe we use 2 time frames in this model right here. So for short-term trading, let's say our trade chart is on a 15-minute time frame and our trend chart is on, say, an hour time frame. So that's what I call short-term trading. Those trades can last for days, maybe even a week if you catch a good run. But the day trading model is very quick. It's mostly minutes is what you're in on that system. If you're interested in that kind of trading, it's a very good trading system platform for that. So for the short-term trading, this model identifies an area to trade the security or options. Over here, we prefer trading futures and just trading straight futures on it. There are some stocks that are very liquid that you can trade this on, trades very well. But over here, you have enough time frame, and the model gives you enough of an area to operate in where you can actually trade options in there if you want to. It's used on all markets, and you get to pick your time frame once you see how the model works. Alright, so here's a glimpse at it behind the curtain. This is the day trading, the directional model. Alright, so first I'd like to start over here. This is the long-term trend on the day trading model. Not going to go into it in great detail, but what we identify is a sustainable trend. And you do not have to get into the trend right off the bat if you're going to make money trading this. You really don't. So all you're looking for, there are multiple times through this trend in the daytime frame, and we're only talking about maybe 2 hours on this downtrend right here, where we had on the trading time frame. I think I went back and counted. It was either 6 or 7 tradable entries, very clear in accordance with the rules, and this was a good day. And the only way you would have lost money on trading those if you were trading by the rules is if you overstayed your and tried to take more money out of the market. But you can see this rectangle identifies the downtrend. So this is just one example. This is not the only example in this trend. This is just one example. This oval right here identifies the area. We have a rally up. Our trend model says it's still down, so our short-term model, our trade chart model, is where we want to exploit that move. So all we're going to be doing is looking for reasons to sell the market on the trade chart. So we move over to the trade chart, and what we see during this time frame is this is an indicator I use to measure extreme moves in the market. So what I really like to see is this indicator get above the band while this is in a downtrend. Now this looks like a rip-roaring bull move, but when you look at the downtrend, the longer time frame, it hasn't even really buckled the trend model yet. So that tells me that, hey, this is potentially a high probability shot at being at an extreme, and we may have some tradable downside action. So once I see that, then I just go to the chart and I look for reasons to sell, and I have very specific rules for getting in. First one comes right here when we break through the low. That's entry 1. If you don't want to take that, you can come back here, wait for the first rally and the first flip back down, and take that as soon as that market flips back down, which will put you in on this bar. If you miss that one, then just wait for another flip. You take that, you get another one, flip down. So you had multiple opportunities to at least get one trade off in there. Now I don't trade every one of these. For me, that's ludicrous. I'm looking for one. I'm looking for the high probability move. For me, the high probability move is this first move. The first reaction up and back down. That's the first one I'm looking for. And I'm looking at very quick profit targets. Trading a couple at a very close target, moving his stop up to break even and then letting it ride. So anyway, it's just a quick glimpse of the day trading and short-term model. Alright, trading extremes. You get to see how we identify tops and bottoms. We'll follow our process of identify, confirm, and trade. Learn how we handle the special situations in some of the best businesses in the world. We monitor these stocks daily, so every day I come in after the market closes and I run a scan on what I call the best businesses in the world. And what I'm looking for are these one-off events where the market has punished them severely, has taken them out behind the woodshed and just beat them to death, and looks like they're just laying there waiting for the vultures to come by and scarf up the remains. That's usually when we go in and scoop them. So we're looking to scoop them on the death fall right there. We're talking about businesses like Microsoft, Walmart. We have some positions on right now that I'll show you: Eli Lilly, MDT, Medtronics. So we're looking for those types of companies because they're not going out of business. And honestly, I got to tell you, in a bull market, we're still in a bull market right now. Those businesses will come back and will vindicate you if you're in if they go against you. The most recent 12-month period I had trading these, in the 12-month period now, I had 112 trades and only lost on 2 of them. Actually, one I scratched for a break even, and the other one I lost less than $100 on. And you know, some of those, to show you how insignificant the $100 was, some of those trades I had $100 in commissions on for just the commissions. So that $100 loss I had was really very it wasn't even a nick. That's why I like these kinds of setups right here. They work really well. So you know, that's something else we bring to the table also. So this is a look at Lilly. You know, once we had the down thrust here, we were alerted to the down move, and actually one of our traders in our little trading group alerted us to Lilly that day, so it met our criteria, and we immediately started, you know, trying to put a position on. So you can see right here I've got a couple of contracts resting in to try to scoop those up. Over here, MDT, we already started building a position. We got several positions in MDT, so yeah, so we're happy to have positions in these, and we take these trades out for months and months to give them plenty of time to work. So these are just a set of statistical models I use to alert me when markets are at extremes. And this is one of the, you know, this is what I use to scan the markets with. So, you know, statistical moves below 2 standard deviations. Neat indicator here that shows us when we're into an extreme move on the downside. You know, we probe through it right here. You know, that tells me we're at an extreme. And it also coincides with this indicator here being below the channel. So all those things together just says, you know, if you're ever going to buy this, this is the time to buy it. So that's what we're looking for. All right, last thing is market analysis. So every Monday morning I get up and I publish levels on the S&P 500 futures, 30-year Treasury bond futures, crude oil futures, dollar futures, and gold futures. And what I do kind of looks like this over here in this chart. These are my extremes that I look for the week. This is first level. These are second levels. And in between is kind of a danger area if you're, or an opportunity area, whatever you're trying to accomplish. But also I keep stats on these positions right here, which is really neat. And for example, right here you can read this, that just based off of the last, well, it's actually a little bit more than that, past half a year or so, The S&P 500 has closed inside of the first level that I plot every Monday 95% of the time for the week. So that should ring a few bells for you right there. If you like strangle trading, or maybe you like straddle trading, and there's about a half a dozen ways you could tackle this. I don't even want to get into it right now, but that's what we do, and I publish those stats every week. Usually on the weekend, so all the guys following me can just kind of keep track of this. That's pretty much it. That's quick. Not a very quick, but as quick of an overview as I would like to give you for what we're all about here on Trader's Mind. So anyway, I'd like to welcome you aboard. I sure hope that what we do here is able to help you out, able to get you on track, able to put you in a position where you can see, if you really like doing this, what it's going to take for you to do it full time. So we can help shed some light on that. And anyway, if we can be of any help at all, just go to the contact us, send us an email, and just let us know. And we'll be talking to you on the blog. This is BA signing out.